Welcome to the Insurtech Story podcast. This is episode 2 discussing insurance technology trends that will shape the industry in 2020 and beyond. Here we will also take you through the best-selling book in insurance, The End of Insurance as We Know It.
Great. Okay, so we have started the recording. All right. Well, very good evening and good morning to everyone. Welcome to the Insurtech Story podcast. This is episode 2 discussing insurance technology trends that will shape the industry in 2020 and beyond. Insurtech Story is an initiative focused on creating a better and a more profound insurtech community by sharing knowledge and bringing professionals from India and around the globe under one platform. So a huge welcome to one and all. And today we are also very excited as we will be talking on one of the best-selling book in insurance, The End of Insurance as We Know It. So hold on tight for that. To begin today, we have a special guest with us, Mr. Rob Galbraith, who is otherwise known as the most interesting man in insurance today. Rob has over 20 years of experience in the financial services industry in a variety of positions in the field of property and casualty insurance, banking, and investment markets. He holds a Master's of Science in Insurance Management from Boston University and a Bachelor of Arts in Economics from Michigan State University. Rob earned his Chartered Property Casualty Underwriter designation in 2003 and has served in leadership roles both at the national and local chapter levels. He was also elected to serve on the CPCU Society's Leadership Council from 2016 until 2018, and previously served on the Industry Advisory Board to the institutes. Rob received the Lohman Award for Outstanding Service to the Alamo chapter of the CPCU Society in 2009, besides many other accolades. To add to this, Rob has been ranked as high as number 6 in Insurtech London Top 100 Influencers. Rob's passion is finding ways to provide insurance products to all who have a need through innovative approaches that leverage the latest in technology, building strong relationships with a diverse network of people from a variety of disciplines and educating the public on the risk they face. So welcome, Rob, and thanks for your time today. It's indeed an honor to have you at the show.
It's terrific to be with you. Thank you so much for the invitation. Very excited to be on episode 2 and excited for what you're launching at the Insurtech Story.
Thank you, Rob. Thank you. To introduce myself, I'm Surya Saha, your host for the day and the author of The Digital Choices, a book written for the emerging crowd who wants to take the leap towards digital transformation journey. Professionally, I'm in the risk management field with more than 8 years with a deep interest in insurtech and enterprise blockchain. I would also like to introduce you all to Mr. Ganguly, our co-host for today. He's the founder of KPI Consulting that provides next-gen technology training programs through classroom, instructor-led live online learning, mobile learning, bite-sized learning, and on-demand learning-based programs on digital transformation, automation, data analytics, blockchain, AI, machine learning, web technologies, and other emerging technologies. KPI Consulting was also the co-organizer of the Bangalore Blockchain Summit in 2019 and also a knowledge partner of the Insurtech Story. Welcome, Mr. Ganguly. Good to have you on board today.
Thank you, Surya. Thank you so much for the introduction.
We will kick off with our show with Rob. So, Rob, just to start, how are you doing today? And how are things at your side of the world?
Great question. So I live in San Antonio, Texas, so in the middle part of the United States in the South, and summer has come early here. It has been very hot, and We've been able to get outside some with my wife and my children to escape being at our home. It's been unusual because I typically travel quite a bit, and I've been home for over 3 months straight now because of the coronavirus. So we've gone out a little bit. We will venture out with our masks, and we'll do things like hiking or swimming, though we can still stay distant from folks and stay safe. So trying to find that right balance, but fortunately, we've all been very healthy here in my family. We do know some loved ones that have been affected, but yeah, just trying to stay safe. So it's a difficult time. How about on your side of the globe?
Yeah, it is. It things have relaxed than before, but at the same time, the risk is pretty little high because the number of cases are going up each day. So it's difficult to manage as well. So, but at the same time, have to get back to a couple of things to for business and others. So finger crossed, we have to be healthy and safe. That's the important tagline today.
Absolutely. Yeah. Yeah. A lot of washing my hands and a lot of sanitizing and
Right.
yeah, a lot of stuff we should be doing anyway. So
Absolutely. I mean, we have to live with it now. We have no choice. Right. Okay. So just to give a quick brief, insurance as a global industry with over $4.9 trillion in total premiums per year, at least as I can remember in 2017, it was the case. It's definitely a complex business that involves some sort of a sophisticated risk pricing, large capital requirements, stringent regulations, and etc. But until recently, insurance has been a virtual island, I would say, in a sea of technological changes. So while new players walk to disrupt banking and wealth management after entirely transforming various other industries, for example, travel, if you look at bookings, etc. So insurance seemed to be operating much as it had for decades. So that era of relative stability has ended with the increasing deployment of advanced technologies like the sensor technologies and etc., like IoTs and others. So as of now, like other major industries, grappling with the risk and opportunities of these new technologies, insurance is somewhere seem to be, in the race, but at the same time not as aggressive as it should be, at least like its peers in the financial services sector. So, there's clearly a lot to unwind in the industry as of now. So with this, if I may, Rob, my question, what, according to you, will be the most important technological trend that will disrupt insurance in the coming time or in the coming years?
it's a great question, Surya. So uh, I guess I would say that typically insurance has been about managing risk and in many cases following what's known as the law of large numbers and pooling kind of things that appear to be alike, right, in kind of certain risk pool. So the example I use, very common in the United States, I'm not sure if this is the same in India or not, for motor insurance, an 18-year-old single male is rated much higher and has to pay a lot more premium than a 35-year-old married female. And so, that's been very statistically borne out. You can see it when you kind of lump all of them together, that age and gender and marital status matter in terms of your likelihood of having a motor claim. But today we have telematics. So I don't need to lump that 18-year-old, maybe very good and responsible driver, in with his peer group. And I don't need to lump that 35-year-old married female that maybe takes it a little too aggressively on the roads. Maybe isn't such a great driver. Her friends know that, right? But the insurance company can't see that risk. Maybe I don't need to lump her in with all other 35-year-old married females that drive well as a group. I can rate them individually. And the reason I can do that is because I've got sensors in the car that can actually directly observe. I mean, it's almost like you're sitting in the passenger seat watching this person driving. And so you mentioned sensors before. So, this proliferation of cheap sensors, it's not just in cars, but it's in the Internet of Things, water flow detections, lights, you name it. Agriculture, there's a ton of sensors that are going on now in agriculture, soil moisture levels, sun levels, et cetera. And so all these sensors that are cheap to deploy can now stream data real time and directly observe things. They don't have to use age or gender or marital status or many other variables that we've previously used proxies for risk. We can actually observe the risk themselves and observe the risk changing. All that gets streamed to the cloud. Is no longer an issue where we have to decide which data we're going to keep and which data we're going to throw away because storage is a limitation. And then we've got artificial intelligence that we can process all this. So if you were to stream all this data to a human, they couldn't put it into an Excel spreadsheet and make sense of it. But with artificial intelligence, machine learning, advanced algorithms, you can. And blockchain is probably coming along the way to kind of keep all of this secure, right? So we know that hacking and cyber threats are certainly a concern for IoT devices. You could hack into a smart car, right, and take control of it. That's happened in the past. So before we get to fully autonomous vehicles, we'll have to solve that problem. And so, it's really just this confluence of technologies all coming together that are fundamentally changing what is possible in insurance. The challenge for the industry is to actually make use of this technology that's now come out over the past decade to do insurance better.
Right. Yeah. In India also, we are witnessing the Indian insurance regulator. So they are also trying to come up with a lot of changes in the way they used to operate earlier, be it in drafting a policy, be it in how to adopt new technologies and what are the rules to be followed in that, who are the, for example, with respect to any partnership, how it should be done. There are lots of engagements that they're trying to bring. Of course, it's kind of an eventual, but at the same time, the good news is the process has started. So with that respect, there are plenty of startups in the Insurtech field are also booming. So previously, what I have personally witnessed, the startups are mainly focused in the fintech part, particularly in payments, loans, and micropayments, and etc. So the trend is moving towards Insurtech as well, starting from micro insurance to auto insurance to agriculture. So kind of lots of work happening there as well. And recently I was also watching one of the accelerator programs of Swiss Re. So they have started an Insurtech accelerator program for Bangalore. So where they are trying to bring in Insurtech startups and trying to find kind of a match together, an alignment where they can fund some of the projects of the newcomers, and they can grow together and exchange of technology and funding happen. So those are kind of good news out there. So it's very exciting. So Rob, to focus on the insurance ecosystem and the digital disruption, we are seeing like 6 areas where the industry has lots to offer. Like, for example, the marketing and distribution part is one of them. Underwriting, customer service, claims management, customer retention, and product development. So could you help us understand the disruption set to happen or already happening in these areas a bit more, like perhaps with some cases you may have in mind? I mean, one of which we all are familiar with is Lemonade for claims. So other part of the value chain will be a little more helpful.
Yeah, so you're right. I think opportunities abound. I think those 6 areas you mentioned are spot on. A couple things. Number one, I actually heard a podcast a couple years ago with Daniel Schreiber, the co-founder of Lemonade.
Right.
And he made 3 great observations. Number one, and so he was talking about fact that he's actually not from the insurance industry. So unlike myself, with over 2 decades in the industry, I've come to know and love insurance. He's coming in from the outside, as are many technologists and entrepreneurs that see opportunities. And what he saw and attracted to Lemonade was that it's a massive industry measured in trillions of dollars, as you mentioned, right? Almost $5 trillion globally. Uh, that it's unloved. So nobody loves their insurance company. You get insurance because you have to get it,
Right.
either because you're legally required to get it or because you protect those assets. But you don't necessarily have the brand loyalty, right? You don't know. It's a set it and forget it type of transaction. You don't want to think about it. We want to go on with our lives and buy our Apple iPhones or our
Right.
iWatches or whatever. And then so it's unloved. And then he used this phrase, and I loved it. It's unspoiled by innovation. And it's very true. We have lots of manual processes, lots of
Okay.
digitizing to insurance in the past meant making that form a PDF version of the form that you could print out and copy and then scan back in, right? So all of that has a cost to it. And here in the United States, and it varies country by country, but I think the general rule is, here in the States, the expense ratio is about 30% for property and casualty insurance. So that means 30 cents of every premium dollar is going to expenses. Many of those expenses are really not benefit you as a current policyholder. So if that expense is going to, other new business and agent row, or it's archaic or system that was built in the 1970s, or all these kind of back and forth, emails or phone calls between claims, between two different carriers to resolve a dispute, to see who owes what, who's at fault, who's not at fault, et cetera. All this add cost, but they really don't add benefits. They don't improve the and bringing costs down. You do a few things, but then you also open up the possibility of brand new products that just weren't possible before because the cost threshold was so high. And so for Lemonade to start with renter's insurance, a product that tends to be lower in premium than either motor insurance or insurance, I think is really bright. At the same time, renters do have items that they want covered, and they do have sources of risk that they want to protect against, such as theft, vandalism, could be, again, water damage, et cetera. And in many cases, what's valuable to people has changed. Your laptop or your gaming system may be the most important thing. In the past, maybe it was your jewelry or your silverware, things like that. So, this technology is not only making traditional carriers better, but it's opening up a whole host of opportunities to previously under market or unserved markets. And I think startups are doing both, right? They're helping large carriers, but then they're also jumping in to these areas that were underserved and succeeding in many cases, and able to quickly build a brand because there's a market there that just was previously untapped.
Absolutely. I'm also, besides my professional engagement, I'm also pursuing my PhD in blockchain, focusing in the insurance claims process. So there was a very interesting phrase that I came across is blockchain is the answer, but what's the question? So similarly, if I look at the Insurtech field, people are trying to innovate in different ways, but there is also something needs to be understood, that is what we are looking here essentially is to solve a decades old problem. So what exactly we are trying to do there? How do we start? Where do we start? So I remember a company based out of UK. They are an underwriter. So I was working on one of the project for them. So as we know, the insurance industry, they depended on like a bunch of paperworks years after years. And especially in an underwriter, how they work, and especially in the Lloyd's market, if you look at now, they want to translate all the paperwork into digital format, into whether scanned PDFs, and there are a lot of data cleaning, data management going on there. But the challenges are huge. I mean, one paper, work, it gets missing. It means it may also trigger some kind of a loss, because it's basically some kind of important document out there. For example, for a policy or a ship policy, maybe two, three insurers have come together to cover insure the particular product for a certain percentage, and any important part goes missing in there when they're actually converting to digital formats. It's a huge challenge for them. So this is like one of the every part of the value chain in the insurance system, how exactly they would convert into a digital format and how they actually translate their need, that is going to be very critical.
Yeah, I think I'm fascinated by blockchain, and I don't pretend to be an expert. And I would encourage folks, if they are interested, Walid Aslakov, who runs InsurBlocks out of the UK, has a wonderful podcast and website, and I've learned a ton from Walid. So yeah, highly recommend him. But I would say a couple points. I think the hype cycle for blockchain kind of tended to go along with the hype cycle for AI, I would argue. And those technologies are in different stages of development. So AI is here, it's here now. Companies that are not using it are absolutely falling behind. And I even saw firsthand a couple of years ago an opportunity at the company that I was with, USA, for the underwriters to basically leverage AI. They had all the information that they were making decisions on, all these feeds kind of come to one underwriter workbench or one screen, and they could look at it and they were recording their decisions, but yet it was going in just to a data. Nobody was analyzing those decisions over the 100 plus underwriters. Nobody was looking for patterns. Surya, you might make a decision to accept this risk. I might take a decision to decline that risk, and it really might be the same risk, right? And so having some artificial intelligence to kind of learn from those inputs behind the scenes, you wouldn't even have to interrupt their workflow to start with, and then over time you could leverage it, and you could have the AI basically making 80 to 90, possibly 98, 99% of the decisions, right? So, and it would have taken less than 12 months, and we estimated we could have gotten a 50% productivity lift, and we were told no, because the goal was only 5%, and we were worried about people's jobs and having to retrain them or whatnot. So AI is absolutely here now, and if companies aren't leveraging it, they absolutely need to put their foot on the pedal and start learning and partner with experts. And there's a wide range of applications. Blockchain, on the other hand, I think exactly to your point, it's a tremendous solution. I think there's lots of applicability to insurance, but there's a lot on them. And I think you really have to get into the weeds, and there's lots of regulatory processes or lots of these kind of back and forth. And there are specific reasons some of these inefficiencies are in processes, and that might be a regulatory requirement, that might be a requirement from a rating agency, that might be a system limitation, et cetera. And so I think it's really incumbent upon experts in blockchain as well as experts in those matter experts to really sift through. So if you've had some process near or I think perfect place to start and say, where does it make sense to have blockchain in? And I think people originally kind of wanted to throw blockchain at everything. And just because you have a database, right, or you have an exchange of information, that doesn't mean that blockchain is the right use case for you. So there are certain specific use cases that blockchain enable that I think are very exciting, but they're everywhere. I know the Risk Stream Collaborative here in the United States has identified, I think it's over 40 some use cases, and it's probably even higher now, big use cases that blockchain can be used. I know B3I is doing something similar as a consortium approach in Europe, and there's been a lot of progress. A lot of technologies gone beyond your standard blockchain to more distributed ledger technology, using things like Corda from R3, Hyperledger and others. And so they may not strictly be blockchains, but a lot of progress has been made. And I think we're going beyond proof of concepts now to actually seeing real production instances. using the kind of blockchain / DLT technology. And I think you're going to see that explode over the next 10 years. So, it's something you'll probably see less movement on in the first 5 years, although some significant movement. But I think the explosion of blockchain use cases is going to come in the latter half of the decade.
Absolutely. I think another reason to back that up is the amount of data that we are generating, in the insurance industry. So as we are, of course, innovating more and more, that is kind of leading the insurers, to gain and store ever more, granular and sensitive information about their customers and, of course, their behaviors and other vendors and partners. So the more data we are generating, these technologies like blockchains kind of will gain more traction in the market. But at the same time, another essential aspect that I want to just highlight is the regulatory framework that will also change as time passes with it. So to perhaps the most significant area to look at is to address the potential new risk as well as the existing gaps in supervision. So I guess this is something which both the industry players as well as other partners and the regulators need to look at in a very close parameters. So that is also something that most of the countries or the industries rather, it's struggling a bit.
I think regulators across the world really need to play a very different role than they have in the past. I think they're very worried about solvency. They're very worried about pricing. They're very worried about customers being taken advantage of, bad faith, things like that. And those things haven't entirely gone away, but to me, they're a lot less important and critical for regulators to focus on than they were in the past. The fact that you can have, ride sharing kind of pop up without significant regulation, and it's in many ways self-regulating, right, based on user reviews and star system and user comments, things like that. You can't always have that in insurance, right? There is that opportunity because you're taking the money up front and premium. Are you really going to be around to pay my loss later on? So there's still some of those traditional regulatory functions that I think are important, but I would encourage regulators to really take a look at not just the emerging technology first, which is important, and I'll get to that in a minute, but what regulation do we have today that really doesn't add any value to anybody? Is it just the way we've always done it? Very similar to old insurance carriers that may have old legacy systems, outdated processes, stuck in the old ways of doing things. I think regulators are very much in that same boat. So I would encourage them to really look at some of their auditing functions and others and say, do I really need to do this? And if I do feel like that's a function I still need to perform, is there a different, more efficient way to perform that audit or that regulatory oversight? As it relates to new technology, I actually think regulators play a huge role in how quickly the adoption of technology happens. What I tend to see is that regulators like to embrace innovation on a micro scale, but not necessarily at a macro scale. So, if it's in a particular jurisdiction or, a particular use case, a new company that comes, they want to be seen as embracive of innovation. And so they'll, pave the way for that new offering, that new technology, that new company. But then when it's deployed at scale, right, it can kind of raise concerns. And so I definitely think there's an education gap. And I don't, it's always the fault of regulators. Some of the feedback that I've heard from regulators is to say, we want to learn about these things. We understand we're not experts in this technology. So we want the education, but the industry has been reluctant to engage them fully or as fully as they would like to be engaged in some of those conversations. And I always encourage, whether it be technologists or startups or carriers, to be proactive, engage your regulator. They're not going away, and you'd rather have them on your side up front than to have them chasing you down kind of from behind after you try to deploy something out and ask for forgiveness later. So some of the Silicon Valley ethos of move fast and break things, I don't think apply very well in the insurance space. Having said that, I do tend to take a hands-off regulatory approach. And a lot of it's because we just don't know the implications of some of this technology. And so I do think there's a role to regulate, things like artificial intelligence. I do have concerns about bias in outcomes. So I certainly would be asking those types of questions as regulators. I don't necessarily, I know some regulators here in the United States, some jurisdictions have said, we want to see the specific algorithm and it cannot come from a black box, like you have to show us the steps. And I worry that, it's really about the outcome, not necessarily about the algorithm. And so maybe there is some black box algorithm that advanced artificial intelligence came up with. I don't necessarily need to understand what the machine is seeing, but what I need to understand is how that impacts outcomes and whether those outcomes are in line with what is expected or if there's a disproportionate negative impact to some consumer. So I think regulators need to find the balance of staying out of the way and seeing how some of this plays out, but continuing to be educated. And if they see things going in a route that they're concerned about, right, really stepping in, particularly if it's harmful for consumers. But I think there's a tendency maybe to jump in a little too early here, and on a lot of this is too new. Even experts such as myself don't know how it's all going to play out. So I think there's a balance here on the regulatory side, but it is very, very important. Very similar to crypto. Crypto was kind of used for a lot of kind of illicit activity, whatnot, and regular consumers that were big fans and saw an appeal of crypto, right? But they were a little reluctant to be early adopters because they were worried about some of the nefarious activities, right? So having that regulation actually can build trust, and that's my hope, that regulators can kind of find the right balance so that consumers can trust some of this new technology and it can speed adoption.
I mean, you have raised a very important point there. Regulators, first, what is more important for them is education. So they have to be aware first of what they have to be, have to do and what the market is going through, what's there for the future. And for some of my work, I very closely work with some of the people based out of Bermuda. So there, the insurance ecosystem is very robust. So every second day, I would hear a lot of regulatory changes that is happening, particularly to the PNC market. So, and if you dig into a bit more, there are rare cases in recent past that those regulations, if you look at, there are certain loopholes. So that maybe the regulators may have not understood it well, but due to some sort of pressure or something they have to curb in very quick turnaround time, they had to come up with some regulations. So this kind of not a profound way of doing things may also create more challenges in the future. So education is absolutely a very significant element there. So Rob, I think of course we are working, of course, very tightly with the time. So I will quickly move on to Mr. Ganguly. So where we would love to hear more about your book, The End of Insurance as We Know It. So it's all over, everywhere on social network, Amazon, wherever you see. So it's brilliant reviews, brilliant stuff. Have gone through a bit, but didn't get time to read through. But I will definitely do it because that's something that we all are looking for in the industry. So over to you, Mr. Ganguly.
Thank you, Surya. Thank you so much. It's been an honor to represent KPI Consulting in this forum. And Rob, first of all, congratulations on your new book, The End of Insurance as We Know It, which has been named as best insurance books of all the time by the Book Authority. Right. So in your book, you have mentioned a lot of things related to, as you mentioned the usage of AI. You have mentioned of related to the upwheels, that the disruptions that the current startups are facing. You have also mentioned that the reams of customer data and the legal contracts, the regulations that insurance takes, which makes much more harder jobs. So if you can tell us a bit, elaborate from your side, if you can share some of your stories which you have written in this book in a much broader way, it would be great.
Yeah, absolutely. Thank you so much, and so glad to have you on the podcast. Um, so the book is divided into four main parts, and the first part is really what's wrong with insurance. This is an industry that's been around for over 300 years, so it's very mature in its development. It's I think underpins a lot of what is drives some of the economic engines in some of the more advanced nations, such as the United States, Europe, and elsewhere. And in fact, my book is actually being currently translated into two foreign languages, Mongolian and Farsi. So those are not the first two languages I would have guessed, but both in Iran and in Mongolia, the markets are not as mature. I even did a podcast last month with a group in Nigeria that's just starting out an Insurtech podcast. And Nigeria is another one of those countries. There's several in Latin America and others where the insurance sector is not as mature. And this lowering of the cost curve, right, is now making a whole lot more insurance products affordable and accessible to folks in those countries. And so they are literally starting from scratch. They can have a blank piece of paper and they're able to design the industry from the ground up. And they found my book helpful in doing that, which I love. Was never intended for that audience, but it's it really found resonance with folks in economies that are just kind of standing up or looking to deepen the insurance industry. For advanced economies, it really digs into what I call the 7 fatal flaws of insurance. And very quickly, that is, it's too expensive, right? It's unaffordable for many people. It costs hundreds of dollars every month. And in many cases, it's a big part of everyone's budget. And yet you don't get anything for that, right? Unless you have a loss. And the likelihood of that happening is very low. And so most of the time that money goes to pay someone else's claim and not your own. So you're not seeing, quote unquote, a benefit. It's too complicated. So when you do have a claim, right, and you're trying to understand what's covered and what's not, it's never as simple as you think in many cases. And so that's very frustrating to consumers, of course. But it's too easy to game the system. And that's one of the reasons it's so complex, is to try to prevent fraud from happening. And so, it's very difficult to separate out, right, what's legitimate, what's not. And we kind of mentioned Lemonade earlier and their use of AI to kind of quickly triage claims. I think they've made some progress there, as have other carriers, but there's a long way to go. There's still not nearly as many claims as you might think that can be processed from even advanced techniques like AI. It's a cash drain. It's a liquidity drain. So, it's not like a credit card where, I can go along and then if I have the loss, I can put $1,000 charge on my credit card and then I can decide to pay off that credit card right away, or I can slowly pay it over time or just pay the minimum every month. I have some flexibility in payment terms. I have to pay the premium up front. So that's liquidity that's gone that I can't use for investing or other things. The insurance carrier gets to invest that money basically on my behalf and make a return on it. It doesn't cover all causes of loss, right? So very notably here in the United States, flooding is excluded from a traditional homeowners policy. It's written through the federal government, but flood is yet a major natural catastrophe, right? We've had our own incidents of flooding. There's certainly been that in India and everywhere, all around the world. So, why would such a major peril not be covered under a standard contract? It doesn't make a lot of sense. And again, it comes down to expense, but that's certainly a pain point. It doesn't cover everything that you would want to insure, and it doesn't cover every one that we would want to be insured. And that's why we have disaster relief funds, right? So when we have cyclones, tsunamis, earthquakes, bushfires, like these bad things happen. And when people don't have private insurance, the government has to step in and provide loans or, disaster relief, or other countries come in. And that's at a cost to taxpayers around the world. And really, we should have those people be part of the private insurance industry, right? And to have private sources of capital to help them in their needs. This shouldn't be funded from taxpayers and governments in an ideal world. Part 2 talks about, well, why haven't we solved these 7 fatal flaws? And again, it's a industry that's been around for a long time. We have lots of smart people that work in the industry. So these are very difficult problems to solve. So easy to articulate, but very difficult to solve. And so it's not as easy as other parts of our life where we say, well, we've got this cool new technology, right? Why can't I do that the same in insurance? It is complicated. And so there isn't always a recognition from Silicon Valley and elsewhere. There's increasingly more recognition that it is complicated. It's not as simple as coming in and just disrupt all those folks that don't know anything about technology. The third section, though, really pivots to what is the art of the possible. And I quickly go through some of the emerging technologies we've talked about on this podcast and give people a high-level overview, certainly not an in-depth discussion on any one technology, but I kind of describe it at a high level and then try to connect with the readers, how that technology might be used or what is the potential. And this whole idea, as we've said, that yes, we couldn't solve those problems in the past. And one of the reasons is we didn't have the right technology, but we might have the right technology today. Either we know we have the right technology, or it appears in the case of blockchain, right, that it's very close to being there. And so we as insurance professionals do need to completely rethink what's possible in the industry. It's very easy for us as professionals to say, well, the reason that it is the way it is and it's broken is because of X, Y, and Z. But those reasons may not be valid anymore. And then the fourth part of the book really, I certainly don't have all the answers, but I try to project forward. I try to give readers a roadmap of how should we be thinking critically about this new phase. I contend that we're going to see more change in the insurance industry over the next decade than the past 3 decades combined. And so if you're not thinking this way, either from an outsider perspective, a technologist, an entrepreneur, an investor, venture capital, or from inside the industry, you're going to be surprised. And so I think that's really resonated with the audience as well. It's just to help motivate thinking around this space. Certainly not the final word, but again, hopefully it's a way to really be a springboard to jumpstart thinking. And finally, I'll mention just the title of the book. Everyone focuses on the end of insurance part, and I get a lot of folks pushing back on that, but they don't always pay attention to the as we know it part. I'm not saying insurance is going away. In fact, I think it's a critical product that is needed maybe now more than ever. What I do think is the way that we've done insurance in the past is going to fundamentally change. And if we don't embrace it and move that future and be part of the change, we will be left behind as an industry.
Right. Excellent. Rightly you have mentioned, so it should be named, this is the new beginning as we know it. Rob, so you have showcased your thought in your book with the authority of an insider and the unique perspective names of outsider. You focused on the past and future of insurance with some issues and opportunities that brought forward to the readers, alongside with the view of technology and innovation in insurance. So with this, where we are heading now, I mean, as an insurance industry, what should we expect now on?
So it's interesting. We talked at the beginning of the show and how it's really affected everyone worldwide. When I talk to folks all over the world, we've actually been in a very similar state, right, with the social distancing and having spikes and then cases coming down and loosen up when we go out a little bit more. So I really think it's going to accelerate a lot of these trends, this need to go digital. We haven't talked a lot about distribution, but that's a huge part of this, right? Physically going to an agent or broker and sitting down with them for an hour. Nobody wants to do that anymore, and they especially don't want to do this during this time. They want to be able to transact business online. They want to be able to get multiple quotes. They want the process to be very quick, but yet they want to make sure they have adequate coverage. They want to make sure they understand what they have as it goes to the, it's too confusing part, right? And so how do we make this complex product simple to understand, simple to purchase, simple to distribute, but then robust enough to kind of be tailored to that person's needs as they go through different phases in life, right? Maybe they start on a farm and then they get married and then they grow crops and they start a business and maybe they move into the city later, et cetera, right? So, we want insurance to anticipate our needs as customers, as many other industries, right? Netflix tells me what I need to watch next. Amazon tells me what I should purchase next. So why doesn't insurance know, what product I need next? Right. So I think the demand is there. I think the environment is there. Certainly we've got, a lot of venture capital and yes, some of it's slowed down, but I still think there's lots of money sitting on the sideline that's still looking for an opportunity. Deals are getting done. I've talked to some startup founders that say their business has never been busier. They're getting phone calls left and right. So I do think that in many ways, this will accelerate some trends. I actually think it'll be a little less about disruption in the short term. I think some of those bets will be kind of put to the side, and people are going to focus on efficiency. They're going to want to place bets on the things that are a little bit more of a sure thing in their view. But again, there's lots of opportunities to streamline, to automate, right? We don't want people coming into the office processing paperwork, and some things can't be done at home. So we need technology to bridge the gap. So I think you're going to start seeing that on the both the front end side on distribution and on the back office kind of automation side. And my hope is that successes on both fronts will then kind of translate to the entire insurance value chain over time.
Okay. Thank you so much for giving us such a nice view about your new book. Over to you, Surya, if you wanted to conclude.
Yeah, so I mean, Rob, like as you have mentioned very categorically in your book, um, you know, how like the technology gap, how it is prevailing, and the perception of insurance. I remember in 2017 in a financial conference, there was a person who said, okay, so you guys are from the insurance industry, so you make money by denying claims. So this is kind of a perception that is there all around the globe. So, and the hard fact is people hardly understand insurance. So as you rightly said during the beginning of the podcast that, there are some regulatory or some sort of a need. That's why people involve in insurance. Now in India, people are also tend to buy a policy for life insurance I'm talking about for an investment purpose, for tax benefits and etc. So the fundamental need recognition itself, it's very it's very shallow. I mean, it's not the right word to use, but yeah, it is not quite profound there. I mean, there's a lot that we need to work on building a perception, and technology is at the forefront that will bridge this gap, at least to a greater extent. And particularly when we see the new generations coming up, who even though do not understand insurance much, but they would involve in it with just a matter of some clicks from the smartphones, how things will change. I think that kind of a drastic innovation is absolutely going to change everything what we know about insurance as of now. So beginning of a new era through your book, The End of Insurance as We Know It, it's brilliant. And in insurance as a subject, there is not much thought leadership there in the market. And the kind of effort, Rob, from you on all these things to educate the community, it's absolutely, laudable. I mean, it's brilliant. Thank you very much. So
thank you so much, Surya.
um,
I appreciate that. I'll tell you a quick story because you mentioned insurance, and I met a gentleman from India here in the States one time. As you mentioned in my biography, I started in banking, went over to investments, and then I fell into the insurance side. And I really wanted to get back to banking and investments my first 5 years. I did not like insurance. I thought it was boring, staid, all the things that we've talked about before. But I've come to grow to love it because it does have this social element. You're helping people at their very time of need, their greatest time of need in many cases, in a way that you're not in banking, the way that you're not in the investment markets. This gentleman in India had grown up in a village on the western coast, and it was devastated by a cyclone. And there was no insurance for any of the damage that was caused. And so it was very much families helping other families, picking up from bootstraps, right? Savings being wire transferred, really a communal effort to pitch in funds to earn money and to rebuild the village. And later on, when he went to university and started working in the industry and discovered this wonderful thing called insurance, he was amazed. And he said, I love working in the insurance industry because had we had this product when I was a child in India and when that cyclone had happened, we could have rebuilt much faster at lower cost, right? It wouldn't have taken, years of everybody pitching in, right? To kind of, putting rupees under the mattress type thing. And so that's the part that I think insurance should be, but it's too often not, exactly as you point out, Surya. So I think with technology, we can make insurance as worthy as it deserves to be and it needs to be for our society. So I'm thrilled to be with you here today. Thank you so much for having me on.
Thank you, Rob. Thank you very much. I know we are running out of time, but if you may allow me for a couple of more minutes, I just want to discuss one important point which I just came up, right now while through the discussion. Rob, you have, earlier mentioned about cryptocurrencies. So, an interesting case in point, if I would like to say, the emergence of new category of companies that is coming up that like independently do not have much to do with the insurance business as such, but what do you say? They are trying to build that technical capabilities. So that may trigger a new world of diversity to them, which they might get into, which is nothing but insurance. So, owing to the sheer complexity of the insurance industry, which we all are aware about, these sort of companies are now playing a huge role in improving the customer experience, developing new products and services, creating whole new business models, in overnight perhaps. So, how do you see these technology companies playing a pivotal role in the success of legacy insurance? Like, you have mentioned cryptocurrency. The first thing if it comes to my mind when is Libra. So now Facebook has come up with Libra. Now tomorrow Facebook might launch insurance policy of them or for the market to cover perhaps the crypto exchanges. So in that case, how do the incumbents compare and compete with such huge technologically capable companies?
That's a great question. I don't have an easy answer. So I'm a big fan of Libra actually, and it makes a lot of intuitive sense to me. I do. I don't know that we'll ever get beyond the fiat currency issued by central banks because there's so much sovereignty, particularly for large countries like the United States, China, and others regarding their currency. But to have it not under the auspices of one nation or have one nation be able to influence, the currencies of other nations, and to have one kind of global currency that's trusted and decentralized like Libra. So whether it's Libra or another one, I do think we'll get there because I think it's going to unlock so much benefit in terms of global commerce and people all around the world knowing that they don't have to worry about inflation anymore. They don't have to worry about debasing the currency. That their Libras count as much as everyone else's Libras, right? And you kind of know where you stand. So I'm a huge fan. I think that's going to be really difficult. I think insurance companies that see that things like motor insurance, we don't see a ton of growth in motor insurance. And in fact, motor insurance may shrink. Allstate here in the United States just announced they're laying off thousands of people. And so I think that could be an early sign of what's to come in the industry because our expenses tend to be very fixed in the insurance industry, right? Systems and people. So the marginal cost of adding one more policy is really, really low. It's really just the losses itself, right? But from an expense standpoint and the distribution cost. So as markets shrink, carriers have to find ways to replace that revenue to maintain the expense ratio. Otherwise, they're going to have to slash expenses a great deal. And so I think insurers that are forward thinking are going to see opportunities like this and try to they may be behind the scenes. You may not see their brand as much, and they may be, but they'll provide the paper or the capital or the regulatory approvals or whatnot, kind of on their paper. You're seeing more and more of this fronting activity. So I could see a potential partnership there, but I do think it's a threat for sure. Amazon, right, has insurance relationships in India. Who's to say it wouldn't come to other parts of the globe? So yeah, it is very interesting to see how this will play out over the next 1 to 2 decades. And I am very worried about all but the largest and most innovative insurance carriers.
Absolutely. I mean, it's going to be very interesting days. Things are popping up. Everything is going from small to large, things are scaling up. And I'm also very much interested to see how things move in very niche industries, which we have not perhaps experienced the way it is improving in this particular couple of years, which is space exploration. So I'm very much interested to see how InsurTech will play a role there. So, cross.
Absolutely. Yeah. Yeah.
All right. So as we come to an end of this insightful and exciting conversation, I would like to thank Rob for all your thoughts and opinions on the subject. I'm sure it will help our viewers to gain a different perspective towards insurance innovation and what the future holds for the industry. It was a true honor and a privilege to have Rob on the show, especially on our second episode in the journey on Insurtech. I would also like to thank Mr. Ganguly for his time and all his support to this initiative. It is indeed an opportunity to collaborate with KPI Consulting, one of the very dynamic team and ambassador of emerging technologies in India. Besides, to know more, you can log on to www.insurtechstory.com as we look forward to discussing more pressing issues and highlights on the future of InsurTech with Rob in the coming months. Rob, once again, a big thank you for coming on board, and I look forward for more engaging discussion like this. Have a good day, and thank you very much.